Hello and welcome to another episode of Casual Friday. Once again, it's just good old cred and duck. For this one, no shortage of things to talk about. Brought to you, as always, by the FTX app, the best mobile trading app experience on the market. Although I don't know what a good trading experience is like in these current market conditions. Maybe if the app didn't work, it'd be better, so you couldn't trade this mess. Speaking of trading this mess, that's what you tried to do. Don, and came out more or less break even. Now, unfortunately, the break even bit is just the financial side. Your credibility, your clout, your acumen as a trader, all of that is now irreparably damaged. So, how do you feel? What's the post mortem?
Yeah, I mean it's tough. It's like you lose all kind of credibility the moment you have like a loser or like a not a winner anyway. And I'm just coming to terms with it. I'm just coming to terms with being washed up, basically.
You're only as good as your last trade, right? That's how the saying goes.
Yep.
I mean, we'd made a video on your idea, and we don't have to dwell on it too much because the invalidation is pretty obvious. But the TLDR version, for those who didn't watch last week, basically, when the market reaches monthly support, if it's going to act as support, A, there's usually a deep wick. B, once support has supported, the market goes pretty quickly. So while you can wait for some sort of reclaim of monthly structure to get long, Don's idea was that he's essentially fishing in the area where if there's going to be a wick, that's where it's going to take place, and then for a fast move into, range midpoint, range high, whatever. And obviously the invalidation for that idea is both technical based and time based, which is to say that, if you look at the 6K example, that's probably one of the clearest ones, right? You've got a deep wick, close above the level, and then it just shoots off. And so presumably you're expecting something similar, that 30K-ish is the wick portion of that larger 35, 37 support. It moons into the close or closes above support, does whatever, and then moves swiftly upwards. So I'm guessing your time-based invalidation was hit, because looking at this on the daily time frame, like you were buying in this consolidation and prices still within this consolidation. So some might argue, well, price-wise, you're not like obviously wrong. Market's still moving sideways. I'm guessing it's mostly the time constraint of the trade that made you manage.
Yeah, I mean it's just I've been talking about this for like more than a week now, where I've been every time I've talked about the trade, I've been a little bit more bearish, just based on the time, really. Because like if I'm buying, right, and if I'm right, I'm usually right relatively fast, especially when, like you said, I'm fishing for wicks, right? Because the thing is, there's only so much movement that you can realistically expect before the close. And if you have like 10 days before the monthly candle closes and you're expecting a 1K move, that seems reasonable, right? If you have this, you're expecting a 1K move, but you only have 1 day, that's already like starting to reach, right? And it's getting more and more risky to kind of expect that the closer you get to the close. So what's been happening the last few weeks is price hasn't moved at all, and it's just like an option, really, right? Where it's like you lose based on the time. Like your trade gets less and less likely just
Theta,
based on
time
the time.
decay, right?
Yes, exactly. And the good thing is, like, I didn't I didn't put like an option trade on, because otherwise I would have been completely rinsed. But yeah, I still look at that, like that angle, and it has to kind of move, and it just didn't. And then you have like 4 days left towards the monthly close, and then you have like an astronomical kind of price movement that you have to hit, right? I was just looking at the monthly, basically, and then you have, from current prices, you have to move up 8.4K, um,
It's a lot.
in like just a few days. And that, given current price movement, especially given that the S&P has been moving up and the Nasdaq have been moving up and Bitcoin hasn't, right? Just seems very, very unlikely. And that's why I managed. I was like, I saw an early divergence between stocks and crypto, and there already was a little bit like, okay, this is like these are the last legs of this trade, because really, like, doesn't really make much sense to hold it still. And then once I saw it like diverging a little, I started selling, and then it diverged a lot between the S&P and Bitcoin, and I was like, okay, probably was right, and kept on selling. Yeah.
Makes sense. Let's break that down to some extent, given, it's kind of transferred to the market analysis portion. So it looks like the monthly time frame is going to close through the range, right?
Hmm.
And that sets up a pretty ugly monthly chart, right? The idea is the market was in a range between 30 and 60k, failed upside break, bounce of support that could only take it to the range midpoint, and then a breakdown from that roughly year-long consolidation, right?
Mm-hmm.
The video I made a while ago, my argument was that your kind of best case scenario is like some version of 30k holding. So even if the monthly time frame closes below support, if it then kind of reclaims that range low 35, 37, you're good to go, right? Even if it's not on
Mm-hmm.
the same monthly close that looks to break it, if it just like eventually does that, that's a pretty decent bullish signal, just like trading back within the 60k range was a decent bearish signal, right? So there's still that much to look forward to. But if we take this at face value, which would be a monthly range breakdown, any rallies into 35, 37 have to be treated as bearish retests until proven otherwise, right? Until the monthly proves that it's back at support and that its price isn't being accepted below the range, or you have to wait for basically the monthly range breakdown to play out. And monthly range breakdown to me is like a pretty big fucking deal, right? So in terms of targets, like if you think 30k, like if the monthly range is 35, 37, and then it's a year-long range and it's breaking down, it doesn't make sense to me to have like very conservative targets. Like, oh, it'll just like quick dip to, 28 or something. I mean, we've already traded through that. But that type of logic doesn't appeal to me. I think at that point you have to start making 6k-esque analogs, not in terms of price targets, but just in terms of when you have a big range and that big range breaks, you better, expect volatility or expect like pretty meaty continuation. And just looking at the high time frame chart I've got on the monthly, similar to you, the first real structure I've got is 14k, and then there's 10k, and then really scary stuff below that.
Yeah.
Anything you disagree with there? Would you? So if let's say this closes below 35, 37, which looks very likely with just 4 days to go.
Mm-hmm.
If it starts to rally into that level, kind of 35, 37, the monthly range low, would you see that as a bearish retest or test of resistance, that type of thing? Or do you have a diverging opinion on that?
Yeah. So the reason why I closed, because I could have, you can technically still hold a position like I had, right? And then hope that you get a bearish retest to close into, which would have been like a win, right? Like as you said, like if it goes to 35, 37. But the thing is, this thing breaks down if it closes here, right? Like it is legitimately a breakdown, and those don't have to return back, right? Those can just like these kind of breakdowns can just go. And I mean, like you said, if you just compare it to the 6K breakdown, that broke down and immediately went to 3K without retesting 6K at all. And the next time it went to 6K, it just broke to the upside without like taking any pause at the level whatsoever. So it's like I could have held and I could have hoped that next month is going to be a green one into a bearish retest that I would have had to sell at 35. But at that point, I'd much rather not, just based on the fact that, like, if it breaks down like this, the chance of it actually continuing to break down is much, much higher than it going up. So I think, yeah, if it goes to 35, 37 next month, that's a sell
Mm-hmm.
for everyone that bought like I did. And I don't want to be the guy that has to make tough decisions if next month just opens up and starts selling again. Um, so I just rather be the guy that has no position and then can make decisions from a point of strength, because it's really, really tough um, to kind of make decisions when you bought below the support that you wanted, like that you
Yeah.
wanted to hold, and then prices start trading down, right? Because then you have no setup, you have no real reason to be in the trade, and then you're gonna capitulate basically the moment it actually gets hairy, where you usually would want to be buying. So for me, just makes sense to be out of the trade. It kind of sucks because I really hoped that we would snap back. That would have opened up like some cool bullish opportunities,
Mm-hmm.
but seems like that's not going to be happening. And yeah, I agree with your targets, as so to speak. Like 14K is the only support that I have, and that's quite rough. I think we're not gonna get to 14K unless the S&P starts trending down again. That said, I mean, there's quite a few
Thank God
reasons to
it's not in a
believe.
downtrend, right?
Exactly. There's so many reasons to believe that the S&P is going to be trending down over a long enough time period. One thing that I do want to make clear with that correlation thing that we've been having, uh, maybe I'm saying this while the correlation breaks down, whatever, it doesn't really matter. But like I've seen so many people argue that the S&P is bearish, and like the macro is bearish, therefore Bitcoin has to go down and can't bounce, right? And that's like you kind of making a high time frame analysis of the S&P, which fine by me, right? If you have like that view, I think it's not an unreasonable one to say, okay, as long as we have QT instead of QE, that prices are gonna go down, right? But it's like it's a long term kind of view. And if you then look at Bitcoin on the daily time frame and make decisions based on that long term view and kind of deny the possibility of any bounces, I think that's foolish. But obviously, what happened is that we did get an S&P bounce. It's just it didn't transfer over to crypto at all.
The
And
decoupling no one asked for, right?
yeah,
Let's talk
it's a
about that,
really
right? So,
tough
so
one.
as
Yeah,
you mentioned, what do you think of this structurally? The S&P at the moment on the weekly time frame, this is a pretty significant candle, right?
yeah.
Like similarly, it's like approaching an area where you'd expect some resistance if higher time frame market structure is going to continue to the downside. Like it's getting there, but this has been a really nice rally for the S&P, and we've had no part of it. And this is one of the things that made me unsettled, because when it came to the correlation, it's like we've got all the correlation to the downside and none of the correlation to the upside. So at that point,
Yes.
you kind of have to make the case for crypto-specific weakness, right? So it sells when everything else sells, but doesn't bounce when everything else bounces. Do you see this as like a significant shift in market structure? The fact that we've had such a strong week in the S&P and Bitcoin hasn't done shit. Kind of what's leading, what's lagging? What's your analysis of this? Is it kind of just basic that look, we dump with it when it's weak and don't pump with it when it's strong, therefore we're weak? Do we have to make it more complicated than that?
No, I don't think it's much more complicated than that. The sad part is that I like a big part of my thesis for like my long trade was actually S&P, the S&P
You should have
hitting
bought the
support.
S&P, bro.
So I was like, the S&P's at support. These people are like all like bearish on the macro, talking like as if stocks were going to zero. We're gonna bounce so hard, and that's gonna translate over to crypto big time. And I was completely wrong on that, obviously, because it didn't, and we've been weak. But yeah, it's really problematic in my opinion because, like you said, we're kind of starting to trade into resistance, right? Bitcoin is barely holding on to support right now, while the S&P bounce big time into resistance. Now, if this resistance holds and we actually start trading lower again on the S&P, what happens with crypto, right? If we have this massive weakness while everything else is looking up, I can only assume that we're gonna like break down, and I think that just makes sense
Yeah,
to
you're
think.
like hanging on by a pube as everything is mooning. God forbid it farts and stops mooning, right? It's like, what
Yep.
are you really hoping for at that point? I mean, from a really lazy TA zoomed out point of view, I'm just looking at the daily time frame BTC USD. It kind of just looks like we had a big move down through a high time frame level. We went sideways and now we're drooping down again, right? It's kind of the impulse. I can't draw properly. Impulse, and then this the consolidation phase, and you kind of have to assume impulse in the same direction, unless some kind of again monthly time frame strength came in or something like that. But I think TLDR for the majors is this: if this monthly closes as a breakdown, which looks incredibly likely, it's worth taking seriously as a signal, right? And if you want strength, like if you want to buy, basically, it either needs to get cheap enough for you to be a kind of distressed value buyer, or it needs to be strong enough to suggests that it's more than a counter trend rally and that you've got some sort of invalidation or structure to work with, right? I think we said almost those exact words in Tuesday's technical roundup as well, where it's not cheap enough to be attractive and it's not strong enough to be attractive either, right? I think we're talking about
Yeah.
ETH, but obviously applies to the market more broadly. So, for those who don't follow all too often, for BTC USD, that means a monthly close back into the range above 35, 37. That could happen next month. It could happen in 6 months, whatever. That in itself is a pretty reasonable signal. At least you'll have some type of positive high time frame market structure to work with. In terms of where it gets cheap, I mean, previous market cycle levels, right? For better or for worse, it's not unprecedented. Like we saw a lot of stocks go back to their, pandemic levels, and some stuff full retraced, went even lower, whatever. So it shouldn't be, especially if technicals continue to look weak and the economy's shit and whatever, like all the stuff that's been dragging us down, if it keeps dragging us lower, there's no reason to be shocked at price trading previous cycles levels, right? And for us, the earliest iteration of that is 14k on the monthly time frame. But then overall, you've just got this like kind of 11 to 14k pre-parabola shelf, I suppose, is one way to describe it, right? Because that's the last area where we actually have like some sort of candle bodies, some sort of price action, and then it's basically from a structure point of view, just kind of a thin air rally from 14k to 60k on the monthly at least, which is what made it so glorious. The only potential bounce zone ahead of that, I want to get your view on this as well, is the kind of weekly confluence closer to 20k, and by that I mean it's the previous all-time high, right? And it's also this kind of trend following 200 weekly moving average, which is currently at around 23k or thereabouts. Do you think that area is attractive even on like a short-term bounce basis, or maybe that's the area which provides a bearish retest, even if it's not the macro bottom? Do you have any strong views on levels that are ahead of monthly support, so 20k area?
Honestly, no.
No, yeah, fair enough.
I think in general, like this was the chance that we had, and we still have it. Right? It's not like I'm saying we can't close above monthly support. It's just very very unlikely, right? But for me, this is kind of what's the setup for it to moon, and I'm not gonna be buying the first level after a monthly breakdown. That just seems unreasonable to me.
Sure.
Even if it's the 200, whatever, I'm gonna be buying either 14k at this point or 37, or if we start trading in a trading range again, right? And I'm not saying that that's never going to happen again, because I'm sure it will. Like, let's say we broke down here, traded at like 25k levels, went sideways, and I saw sentiment flip bearish during the range, and I saw like some positive signs in like the traditional markets, and in general, like just something that interests me as well in the range. Sometimes range just make it pretty obvious which way they want to go. Then I would be fine with taking a stab at it again. But as it stands right now, no, I don't. I don't want to be buying the 200. I don't want to be buying 20k, even if that's the bottom, right? Because for me, this was pretty much the perfect setup that we could have had. And if the perfect setup doesn't play, I don't think the weaker setups are going to play either. And we're kind of like with the macro situation, right? To kind of lob back into the macro world.
Let's go.
It's rough, right? It's rough when you have like weakness in Bitcoin versus the traditional markets, and you have the traditional markets not being too exciting in general. It's a really rough trading environment, right? Because you kind of have to expect that at some point when the traditional markets hit resistance or like have bounced enough, they're gonna sell off. And if we don't take the bounces as crypto people and make them into a bigger move, what's the point, right? It's just like I'm not gonna hold my neck out for any kind of move like that. It's just not interesting to me.
Fair enough. Fair enough. Speaking of narrative Bitcoin related stuff, let's quickly touch on ETHUSD first, and then there are some news bits and pieces and tweets which line up nicely. So looking at ETHUSD monthly, it doesn't. It's not great, right? You could make a similar structural argument that you had this bottom of the range. I mean, we've got the big box in technical roundup between 2.7 and 2.2. I've just got as two separate lines. But similarly, if you have a monthly close that looks like this, it looks like a new lower low close and a breakdown from that range, right? Also, I just find it really deeply unsettling on a personal level how we have this fifth bounce in a row at 1700. Man, that's not going to stay in forever. Even if it bounces, that's not going to stay in forever. That like quadruple bottom is going to get fucking plastered at some point. That's just not. Yeah, that's bait. I don't like it one bit. But going back structurally, it's a similar type of thing, right? On the monthly time frame, if this is a true monthly breakdown, you either wait for it to trade back within the range to give you some more evidence that the bottom is in, which is to say above 2200 or thereabouts, ideally a bit higher, but we'll take what we can get at this point. As far as breakdown targets, monthlies, etc., I mean, I've got the highest monthly close at 1100, which is some sort of level. It's kind of shit. Like, if I were
It's a
talking to you
shit
on
level.
Discord, yeah, yeah. If I were talking to you on Discord, I'd be like, "This is shit. It's not gonna bounce there." Like maybe you get a bounce at around 1K or like 998 or 990s, just because the people buying that round number. But if we're consistent and intellectually honest, if monthly time frame technicals are gonna play out, and they don't have to, but they've been really fucking good. If that's kind of the way the market's going, I think the first real structure is around 700 for me, right? That
Yeah.
highest close from April of 2018, the range high, and then the more meaty candle bodies get to really scary prices. I don't want to talk about. Basically the halvening, right? Like if it doesn't bounce to 700, you just divide by two, and there's your fucking TA. I hope this episode ends up being some sort of bottom because Jesus Christ, these are some really. These would be some pretty surprising prices, or at least due to recency bias. We just saw ETH at like 5K, and then seeing it trade down to where Solana had its cycle top. Like what is going on? But yeah, TLDR kind of same applies, right? Like monthly breakdown, that's a signal worth taking seriously. You can be bullish if it invalidates that signal and trades back within the range, or you should probably wait for it to be much cheaper. And then on the intraday lower time frames, ETH has been showing particular weakness relative to BTC. Like it already broke down from its consolidation, right, on the daily, whereas BTC is still kind of holding that range. Yeah, and it's got that really clumsy triple, quadruple wick bottom, and I would be very surprised if that doesn't get probed more meaningfully. Anything to add on ETHUSD?
Yeah, I mean, if you probably want to start buying ETH when people actually concede that it's still an altcoin. I think
That's nice. Yeah.
Whatever price that hits, I think it's probably going to be close to the bottom. But in general, I think, as you said, 1K is shit support on the monthly. The
I
really
might buy
good
some for the
supports,
memes, right? It's a good meme support. So you have
it
like in your
is.
trading log that you're buying ETH for 1K, so that when it goes to $1, no, I'm joking. So like, I think it's one of those like trading log levels, if you will. But it's not like a big structural one, if we're being honest about the monthly, right?
Yeah, and I mean the really good one is 400. The a little bit worse one is I think 700, and then like you said, 1K is also like pretty okay. But it's like it's not really okay. It's not really a good level, but it's like it's round and there's nothing close to it,
It's
which
like
makes it
20K for BTC. You're like,
yeah.
I might nibble, but I don't expect it to do as well, right?
Yeah.
If there's anything I learned is that the monthly time frame has just been so chad throughout this whole thing, and anyone trying to front run it or trade around it or not take its signal seriously has just been eating shit with a huge spoon this whole time. Like I remember making so many boring technical roundup videos in a row when the market was at like 40, after it hit the monthly resistance at like 46, 47. I was like, well, that's the range midpoint, and now there's monthly support at 35, 37, and I had to make those videos for like 3 weeks while the market just grinded down, because I was like, what do you want me to do? If it's trading monthly levels so well, I'm not gonna like jump ahead of those monthly levels with, as you said, worse levels or lower time frame setups or whatever else. Yeah, I think that's pretty good for ETH. Reclaim, fine. Otherwise, you need to get much cheaper to be attractive. Something
Yeah.
you and I covered. Sorry, go on.
And I mean, if you look at the weekly for ETH, right, it just looks like in head and shoulders top, which I know is like a meme thing, but those kind of high time frame patterns tend to actually work quite well.
The measured move is to 0. That's the target. If you take it from head to neck or whatever it is,
No, yeah, I
shoulder
would
to
say
neckline.
I mean, the head to the shoulders is like a 60% move down, which then you could kind of extrapolate and say, okay, the next 60% move down is then gonna be the bottom, which would be around like 600, 700.
Right.
Um, I don't want to like FUD people out, especially after I've been
Yeah, no,
selling.
right.
But it's like you kind of have to be a little bit on the careful side of things. I think right now, it's easy for me to say, like I said, after I've closed my position, but um, there's a reason why I closed my position, right?
Yeah, because you're shit at this, bro. Yeah, the
Yeah,
thing is,
because
like, the price is the price, right? Like 80, like 2 years ago during pandemic stuff, ETH was less than $100. It was like $90 it bottomed, right? And people were calling for 40. So marrying any of these like price levels per se, and just like no one could have foreseen it going that low, I don't think any of those $100 ETH buyers had a $5,000 target. So the price is the price. That's kind of, especially when it's a weird price discovery type of market where it's all just kind of tightening and liquidity is being sucked out. It can get pretty irrational, pretty oversold, whatever. Which is a great opportunity, but if you've got like what the on-chain guys love to do, just floor model. Like if anyone comes to you in crypto with anything resembling like a floor model, just get the fuck out of there, right? Because it's bullshit. It's a fiction. It's an invention. This is one of the most like reflexive, FOMO, momentum driven kind of leverage cascade powered markets in the world. Any model can't. There are no models which can reasonably account for that, especially if they're ones which give you cozy and comfy predictions about, oh, it'll never go below this. How did that go for adamantium at 45k? Like, come on.
Yeah, it
Just as a
just
side
doesn't work.
tangent.
And I mean, if you for ETH, right, going back to like the technicals, if you look at ETH BTC monthly,
Get this up one sec.
and I mean, there's only really one line that you have to draw, and that is at like 0.0733, which is like the May high, which I mean, we've just like we tested it, got rejected once, broke through it, traded above, got rejected, and are now like getting rejected again. And that kind of looks rough, right? And I think like if you're looking back, like even on ETH BTC, if you look for monthly support, there's monthly support around 0.045,
Yeah,
right?
it's the
And
it's
that's
the breakout level, right? Like
yeah,
roughly.
exactly. And that's like 25% away. I think that is possible. Doesn't the chart doesn't even look bad at that point, right?
It doesn't,
Like
no.
that it looks quite good.
If
It's
this
like
were
a
a five
bullish
minute, you'd be
retest.
buying that bullish Yeah, exactly. You'd be buying that bullish retest on any other time frame, right? The monthly
Yeah.
looks like a Don head and shoulders though. Like this current construction within that
Yes.
range looks pretty bad.
Yeah, I usually try to sell that like resistance on the like whenever you have a range breakout, I try to sell the resistance on the right side of it,
Yeah.
if I get to. And yeah, I mean that's just 25% for ETH BTC. If that is off of a Bitcoin move, right? Let's say Bitcoin moves to 20k, which I mean a lot of people have as their support. Um, that would be like a 30% move for Bitcoin, and then you have the possibility to go 25% lower for ETH, which would take ETH USD quite low, right? And that is like Bitcoin at 20k. I don't think people find too unreasonable anymore, which is I think a good sign, right? People were saying, okay, Bitcoin back to range low at 30k is impossible. That's a bad sign. But when people say, okay, Bitcoin to 14k is possible, and that's like the majority of stuff you see on Twitter, it becomes less and less likely to hit unless you get like the macro situation
The
that we
thing
are
is, they're
in
just
right
going to
now.
lower their targets on the way down, right? That's what people
Yes.
do generally. They'll like be able to call the bottom from when the market's at the top, but as it goes down, they become more bearish and end up like selling into levels they wanted to buy and so on. But I agree in terms of retest structures, like ETH BTC could go down a lot and still be healthy, and ETH USD could get, as a result, could get a lot cheaper and
Hmm.
still trade actual levels and actual structure.
Yeah.
Which is scary. And if your average is shitty, then you obviously won't feel terribly. You won't feel amazing about that. But as far as opportunities go, in this market, being able to just trade significant previous cycles levels on Bitcoin and ETH, I see that as a privilege. If we get there, so I'll be punting down there. Should we
Yeah.
get there?
I mean, something completely off topic that
Yes,
happened to
please.
me yesterday. I went to like a small like festival, whatever, and met up with some friends, and I got introduced to a bunch of girls that like, and one of them came up to me was like, "Hey, are you the guy that is like into cryptocurrency?"
Oh
Another girl
no, who,
told
who
me, and I was
ratted
like,
you out?
yeah, yeah, like a pretty close girlfriend of mine, like just told her basically. I was like, oh
Right.
shit, here we go. And then she started telling me that she started trading in the last year, has
Oh,
been like
nice.
wants to do it full time. Started the company actually to be able to trade futures and options and stuff because in Germany it's pretty tough if you don't have a company tax wise, and told me about NFTs and about how like crypto is gonna go up. And I
Yeah.
was just standing there being like, "Fucking hell, just
Yeah,
no! I don't want to hear this. Don't make me more bearish than I already am after selling the bottom."
yeah.
But
We're so
yeah,
early, bro. We're so early.
yeah,
Makes sense. One other thing I wanted to cover before we jump into some of the news articles. And the thing is, even those, some of them are tweets, some of them are market adjacent, whatever. But like the scale and speed of the carnage is insane, right? I was looking through my watch list at just some of this stuff. So like I've got this category titled Sol Luna AVAX, and one of them doesn't exist anymore, and the others, have basically full retraced.
Yeah, I mean, they basically don't exist anymore.
Yeah, I mean,
But
look
if
at
you look at
AVAX on the
price-
weekly, right? Like, it had its pop above. I remember doing TA on this, kind of trading back below the failed reclaim of 86. Like, from that high, straight red candles on the weekly in a row is just down like 80% without even a sliver of a bounce.
Yeah.
Like,
I mean,
just
turn on log
unbelievable.
chart for that. It's hilarious.
Oh, I have. Don't worry. I'm fully dialed into this. Thing is, I
Nice.
agree with Pentoshi. Like, if it closes above this weekly level, that's where you might get a bounce. But Christ, this chart looks appalling, right? It's appalling. Also, I mean, Luna doesn't exist anymore. I mean, there's some fork thing going on now, which we'll talk about as well. But Solana, in a similar vein, it's you know the people started paying attention to it. I think when it broke through this consolidation at 50 and just went parabolic, right? That's when it technically or structurally became like super relevant and part of the conversation more broadly and so on and so forth. I know there was also some chatter about it with the Sam, sell me all you want at $3, fuck off, whatever. But that's just fully retraced the second leg of its move and the one where most of where it became the hedge fund darling trade to a larger extent, or at least became mainstream. If the next level of support, it looks like on this chart, I've got a turned on log for this, and on the log weekly, it doesn't look so scary going from range high to range low, right? From 47 to 24, that's a 50% haircut. So like if you're buying that weekly support and you're like, oh well, I bought the top of the range and the bottom of the range, still within the same consolidation, half your money's gone. It's a pretty big fucking deal, and there are no kind of green candles to write home about. That's another thing, right? Like the consecutive weekly candles on basically crypto, this thing just looks broken. It looks insane. It looks like a lunar chart type of thing. And at least the S&P kind of broke that curse and is giving like a crumb of reversion for people patient enough to bid reasonable levels even when it looks scary. No reprieve for crypto. What else was I looking at that looked awful?
Oh yeah, by the way, I mean, if you look at Solana, right, it's down 84%.
Yes.
Yeah, and I mean, people are like, I mean, we're kind of still like in that mindset. Okay, yeah, it's down a little, but this is like proper 2018 bear market shit now.
Yeah.
And people like just now have kind of conceded that it's actually a bear market, right? It's been a month maybe since people actually been like, okay, yeah, this is a bear market. And how long did when that happened in 2018? How long did it take from okay, we're in a bear market to actually bottoming back then?
Fucking ages, man.
Took forever, yeah. And,
it's also down 70% from our bearish retest shill at 140. So I didn't take that trade. So I'm not even going to be pleased with that. But that was a pretty big level. I was also looking at Axie, and this is, dude, we got a surprising amount of criticism for our what I thought was our generally uncontroversial claim in Technical Roundup. Or at least our description as to how these altcoin cycles work, right? Where Bitcoin and ETH go up, there's a passive bid in the majors, crypto inflows significantly surpass crypto outflows. Those inflows are looking for more beta, more exposure, lower market cap stuff, things they can get on favorable terms, whatever else. That tends to be new stuff. New stuff doesn't have the bag holders. It's got all the reflexivity, momentum, so on and so forth. It's shiny. It's easier to build a narrative around something that hasn't played out yet. You get a new cohort of shiny stuff. It does well. And the stuff that was shiny last cycle, even if it makes new all-time highs in USD, once it's played out, it generally speaking, with exceptions, trends down against BTC, trends down against ETH, and almost certainly trends down against whatever the new cycle's shiny thing is. I didn't think that was controversial at all, but my mention suggested otherwise. So it's nice that we have like Sol, Luna, AVAX, Axie, because Luna doesn't exist. The other two are down like 80%, and Axie looks like something you'd see in Dubai, to be honest with you. And I'm not talking about Russian escorts, right? I mean the kind of architectural construction of this thing is mega cursed, and it looks like it's going to zero.
Yeah, I mean that's the thing, right? Stuff in crypto goes to near zero all the time, and I think the reason why people are so offended when you say okay, the old stuff is just probably not going to move again, is because they still hold it.
Yes,
Like it's and it's the only reason, right? Because you buy this shit, you kind of get attached, you talk with the team, all of that stuff, right? People are in discords, people are in like trading groups or whatever, and they talk about and talk with people that hold these bags. So, like, those are proper communities, and they try to defend themselves, right? But it's just like, this is an investment space more than anything, or like a trading space. Both work. And if you kind of get married to whatever you're buying, especially in crypto, you're not going to make it. It's impossible to, I think, long term make it if you just buy stuff and hold it, um, unless you get super lucky, or you buy like something like Bitcoin or maybe ETH. I think like everything else, like you buy Axie, you buy whatever link, you buy. I mean, I can list a million things.
Because you can
In
list a million
10,
things because it's most things, right?
yeah.
Like,
And it's like in 10, 15 years, no one is going to know what the fuck Link is, I think. There's going to be something. And I mean, Link is one of the ones where I think like,
I think Link, like, I don't know. I think if we're making bets on a relative basis, I think if out of stuff
Link,
that's going to survive, there's got to be there somewhere. Maybe not from a price point of view, but it does seem to have like an Oracle monopoly if we get technical and
yeah, and
fundamental
that's
with
what I
it.
was about to say. Like, Link is actually one of the most likely ones, right? And Link is
Yes,
down what? Like, how much is Link down? Let's
like
actually
one
look
or
at it.
2%.
It's down 88%, right?
Ah, yes.
It's down 88% from the top. Maybe Link stays around as like an oracle. Yeah. I still think price wise, there's a good chance that in 5 to 10 years, Link isn't going to be worth a tenth of what it is now. Um, and I think you can make that bet for any altcoin in the market. But obviously, if you say that to people, they're going to be furious, because that just basically means
It's
they're
their
going to piss
identity.
away their entire money. Yeah.
Yeah,
And
and their identity, right? That's the
yes.
thing. There was some funny responses to that. So there was a group of people who were like, "Oh yeah, you're totally right." Except my bags. That was my
Yes.
favorite one, where they essentially concede the point that the likelihood that you've got multi-cycle alpha on altcoins is like slim to none. But of course, they think they're the ones who've cracked it, right? And then you just had a bunch of shitcoiners with like rubbish cash tags in their bio who completely disagreed and thought that the framework itself is erroneous. I'm sure they're in for a rough awakening, and I think there was some reasonable disagreement with people like Jeebus, etc., who said that that's true overall, but there are likely going to be some things that were built out in DeFi, etc., that are going to have more staying power than the average kind of ICO or whatever of previous cycles. And I've got time for that argument.
Yeah, I do agree with that.
Yeah,
Yeah.
like we've been getting slightly better cycle to cycle in terms of building, even if it's purely speculative stuff, but it's purely speculative stuff that like works and has a use case like across cycles. Thing is,
Mhm.
keeping that use case and something surviving, this is a point I wish people understood. Like, even if your shitcoin or your altcoin or your favorite protocol survives, that's not the same as outperforming like BTC, ETH, or even the next cycle's shiniest thing, right? The whole premise of the newsletter was about like maximizing altcoin returns, or how to look at it from a returns point of view. Even if you kind of wave around this piece of paper like, oh look, my project made it into the next bull cycle, it's still building, it survived the bear market, it's a completely different argument to go from survival to outperformance, which is the focus of what we were talking about.
Yeah.
And that's a pretty tall barrier.
And something that I want to say is that, like, that I think people kind of misunderstand is, like, you can have the best use case in your altcoin, and then altcoin can, I mean, everything goes down 90% during a bear market, right? Like, your altcoin can be great and still go down 90%. The problem is that it goes down 90%. Someone takes the concept that your altcoin has, works on it a little bit, gets VC funding for it, right? Makes like an ICO, whatever. Like, you can make anything really happen, right? You get a bunch of money, you put on like a bunch of incentives, you fork the coin that like you like the coin that you hold, and make it into something where there's like incentives, it's new, there's no bag holders, whatever, and then that moons instead of your coin, right? And that's like the thing that is the problem that you have with altcoins, is that it's so easy to kind of just make a new one without the back holders on board. um, and that makes it incredibly difficult, even if you like pick the right use case, um, to kind of hit right. Because I mean, you can just be the guy that kind of like is in a coin that develops the technology for the next generation, right? And the next generation comes around, same thing, same cycle, it goes up. They make a bunch of money. You maybe get taken along for the ride, but make less than they
Probably
do.
not, right?
Yeah, and then the next cycle, they've had a bunch of money to put into like development of their coin. They kind of advance further than your coin has, and then 2 or 3 cycles down the road, your coin is not remembered. Like so many things, like that's been happening over the years. I mean, I've seen that happen a couple times now. Um, and then that coin, the new coin, gets the same thing done to it than the other coins have. And yeah, so it's like it doesn't even really depend on whether you pick the right use case or whatever. It just, I mean, you're at the mercy of the market basically, and that's really, really tough.
And
So
also fresh inflows. Like maybe things are going to change slightly, but probably not. Like, A16Z raised another 10 zillion for a fourth crypto fund. I think it's like 4.5 billion.
yeah,
They're probably not going to be buying stuff that's already gone through a market cycle. They're probably not going to be making massive secondary market purchases. They want to get favorable venture deals of new shiny stuff where, you know, they've got disproportionately favorable terms compared to the public. And it's that type of market structure and those investment protection laws, for better or for worse, which perpetuate this market cycle. You don't have to love it. As long as you're aware of it, you'll be fine. Also, can you believe we let Cardano go to $3? Isn't that mad? I've just got the monthly chart open.
yeah.
Yeah,
I
that's
mean,
mad.
it's oh wow, that looks pretty tough as
Yeah,
well.
look,
Holy shit.
yeah, that's a reason. That's one of
I
those.
haven't looked at that in a
I
while,
know,
and that
same.
looks so bad. That's like the Burj as well. That's the Burj Khalifa I've ever seen
Yeah,
one.
we're getting an architecture 101 with a lot of these charts. So if we jump into some of the news stuff,
Hmm.
so one, I want to start with this thing. We've kind of covered it. I won't spend too long on it. I'm sure you saw that Plan B went back to his pre-amended, pre-revision version of stock to flow. And the tweet says, original 2019 55k stock to flow model seems to fit better than later 100k update. Interestingly, a refit based on 18 million average S to F ratio and 3 years new data confirms the original model. The bad news, 100k was probably too high. Wow. I mean, I could have told you that. I'm not a quant. The good news, model still points to 500k after 24 halving. And 7,000 likes on that one. People just suck it up, if you listen to this kind of stuff and it plays a big part in your investment decisions, like, you're a sucker. If you see someone blatantly refitting their views, which is the entirety of stock to flow has been, and you don't question the methodology involved in a model whose predictive power is so terrible and even then needs refitting and tons of hindsight bias, like, you're a sucker, I'm
Yeah.
not going to take any of that seriously. And on the same vein, someone, Willy Woo, did a quote retweet of someone who was trolling him, saying, of course he was LMFAO, supply shock or hard floor, which are both good memes, right? So for those of you unaware, on-chain for a while, as price was going down only, had this whole thing that there's this like illiquid supply is high in the market. I mean, it was, just not in the way they thought. And basically there's this divergence between price and, there's a lot of coins that aren't moving, and that's going to lead to a supply squeeze and price going up. And then Willy Woo was also famous for having all sorts of price floors and adamantium support, 45k, so on and so forth. And so the guy was saying supply shock or hard floor, lol. It takes a while to realize that on-chain is absolute nonsense. You'll get there. And Willy Woo quote retweets, on-chain is far from nonsense, but it's only part of the picture. Notice the pivot. Derivatives data is dominant right now, full stop. I hope someone keeps him to this. On-chain becomes dominant in spot-driven phases of the market and needed for the full picture at all times. Now, and in the last paragraph, institutions are the biggest customers of on-chain data. The last thing should make you bearish, if anything, because these institutions, they like don't care about like price prediction in that regard, right? They want models, they want nice shiny stuff that looks good on a McKinsey PowerPoint presentation, right? So the
Yeah.
fact that institutions are the biggest customers of on-chain data should make you skeptical, not bullish. The other point, and this is where I think he just shows that his reasoning is incorrect, and this is me being charitable. He's saying derivatives data is dominant right now, and that on-chain becomes dominant in spot-driven phases of the market. I've got news for you. This is a spot-dominant phase of the market because there's no the speculation in derivatives compared to where it was previously is fractional. Like, there's no futures basis to talk about. There's no huge premium on either quarterly futures, or funding isn't chronically jacked up or doing anything. Like, open interest the oscillations there are much more limited. Ever since the wipeout for a 55k, it's not by any reasonable means a derivatives driven market right now. It is a spot driven market because that's what you get when speculators are dead, right? Speculators die mostly because spot starts selling, actually. And then you get a spot driven market when derivatives aren't active. That's what we've had since 55k, and on the way down since then. So this is just like he's defeating himself with his own concessions, and this is just a very weak and wayward way to defend something, to defend on chain at the moment. And a lot, a lot of the reason we've been dumping is actually like the whole what is it? Premium. There's a spot premium in the market, which is what a lot of the on-chain guys were arguing the entire way down. And I talked to some of them in private and they later more or less saw where I was coming from, or at least understood my argument as to why that's not useful. But the reason why you've got a spot premium is because spot dumps the market so hard, it pushes the perps down lower, trading below the index, and spot stays higher because it doesn't have that extra push from liquidations or leverage, right? So it's just it's a feature of market structure. So anyway, there's like a million different ways to go about this. But the fact that he selectively chose a tweet and used that as an argument to present why on-chain is still relevant and did it in the most self-defeating way ever. I mean, this is just not compelling in the slightest.
Yeah, I mean, the thing with on-chain is, like you said, it looks pretty. You look at it and you're like, oh shit, this guy is smart. You can make like graphs with it. You can look very intellectual, and you can sound very intellectual as well. I mean, if you look at like how they describe stuff, right? It's like all these fancy words that they use, right?
Metrics you don't understand, right?
Yeah. And this is like the typical kind of grift that people go for, right? It's like super, super easy to make people believe that you know what you're talking about if you just use a methodology, whatever. I can't
Yeah,
pronounce it.
methodology, got it.
Yeah, methodology that makes no sense, but is so confusing that people don't really get it. They kind of think they do, but they don't really. So they need someone to interpret the
The
data
spiritual
for them.
leader.
Yeah, it's like, and this is just kind of how it works, right? You see this in financial markets all the time. Um, I mean, I don't think on chain is the only kind of sector that does it. Basically, there's a lot of. I mean, we have like moon cycle TA and stuff like that,
Oh, but
where
for
I'm
this
like,
cycle, in terms of like crypto and new stuff and credibility, on-chain's been the quickest way to like build a following without knowing a
that is
single
true.
fucking thing about the market, right? It's not even close. And
Yeah.
basically everyone who built their following on-chain pivoted to derivatives or tried to pivot despite a pretty, let's say an incomplete understanding of those tools. Yeah, I don't want to dwell too long on this because it's not like because it's like negative to some extent, I guess. But this is a spot driven market, and you don't have to use on chain at any point in the market, even if his argument were correct. I think that's plenty there. Uh, as far as other content stuff, now that we've covered that very important bit, this is something I want to get your opinion on. Sue tweeted today that Supercycle price thesis was regrettably wrong, but crypto will strive and change the world every day. This is a pretty significant concession, right? It feels like this became a nice little late cycle cushion or meme. The price targets that came out of it are pretty impressive. Three Arrows as a fund have done really well and also done really well in the public eye. And the whole Bloomberg billionaire articles, like it's just like one big momentum and traction machine. So naturally people put a lot of, and they called the ETH uptrend like mega early, like even before the bull market started, and ETH BTC as well, then some of the layer one stuff, some obviously aged better than others, so on and so forth. But as far as the philosophical underpinnings of a lot of those beliefs, Supercycle in terms of public notoriety was really high up there, and now it 60% off from the highs or wherever we are. It seems like it's gone. What do you think of this?
Yeah, I mean, I don't really think it matters too much. It's like not the best indicator because the guy, like, it's always really, really easy to say, okay, this tweet came out at like range low or near about, so it's like a bottom indicator. I think it's not really that way, because you're talking about someone that made more than millions in the market, right? So it's like you don't want to necessarily be the guy that kind of counter trades it, and it's like, ah, yeah, this is like the bottom now. But you don't necessarily want to be the guy that yeah, that
It's
just
not a
kind of,
tradable signal, right?
yeah, it's not a tradable signal. I think it's like it's pretty, yeah, it's a pretty hard step to take for him to kind of just be like, yeah, I've been wrong there, because that was like a big part of um his public identity, right?
Mm-hmm.
But yeah, I don't think it's too like, I don't make too much of it. It's just, it is interesting that it comes out like at this price level, rather than like earlier. But I guess like, and I know this from like just myself, like when you're in a trade, right? When you're in a trade, it's you kind of have to be high conviction, right? And that's what they've been, I guess.
Mm-hmm.
But yeah, I don't have too strong of an opinion, but
It's pretty rough, as you mentioned, coming off the back of the Luna debacle as well, and he like
yes.
misclicked and deleted tweets there, and then the Supercycle thing. It's unfortunate to say the least. But there's a recency bias, right? People love to meme the whole exit liquidity thing, which I don't believe for a second. As in the claim that they are actively tweeting in concert to get counter trend positions filled. Anything like that, I think, is
Nah.
mostly nonsense.
Yeah.
Almost it is nonsense. Full stop.
Yeah,
Um,
the thing is that people don't realize is that like that trading size, that like, I mean, if they wanted to fish for liquidity, right? Especially in the market like this, if Sue or any of the fund guys posts a bullish tweet, right? They're gonna get like what amount of buying are they gonna get, right? At most like seven figures, right? I'd be surprised if it was seven figures, honestly, just off of like a tweet like
Oh,
that.
it wouldn't be. I doubt it. Yeah, unless there's
Yeah,
some
so
ape with a lot of size who just hits clips. But even then.
yeah, but like I think like it's not gonna be the size they would have. Like that's not size for them,
No.
right? As stupid as it sounds, right? They lost probably 10 or 100 times more on Luna than they would ever get from something like
Yes.
that. So like the liquidity, how they're fishing for it, I think is bullshit, as you said. But obviously, like the funny thing is, like people when they're in a position, and this is something that you can kind of observe through every single trader's life, you're gonna tweet about stuff at the top, right? You position yourself, and maybe you tweet while you're positioning yourself, and then you're gonna cloud chase at the exact peak or top. This is how it works, right? Because
Mm-hmm.
you're gonna be most euphoric when like the emotions are flying high, and it's usually where price just reverses, right? That's why you can lay on tweets from people so easily on the chart, and is oftentimes at the extremes of the market, just based on the fact that even if you're not in a position, right, you're gonna be tweeting at the extremes of the market every single time, because you're like, holy shit, this has dumped so much, or it's like, oh wow, this went up so much, and it's like
Yes.
those are the times where the market's actually doing something, so you tweet about it, or talk about it or whatever. It's just how markets work and
Well
how
said.
people work.
And they were super helpful. Again, really early cycle when with ETH, and even late cycle when they told you to bridge to Avalanche. Like, yeah, I don't think this is nefarious. It's an interesting intellectual concession, but I don't fully agree with any type of villain arc, for exit liquidity. They want you to buy so they can sell into, yada yada. The magnitude of difference, when it comes to sizing, makes that somewhat untenable as an argument. This is an interesting one. Crypto exchanges signal support for Terra's rebirth. And they said Huobi, Bitfinex, Bitrue, KuCoin, Bybit have all tweeted their intention to support new versions of Terra and its native token Luna. And then there's a weird one. Do Kwon retweeted posts from each exchange as evidence of support for Terra 2.0. He also retweeted a post from SBF, which has subsequently been deleted. So I don't know if FTX is supporting it or not. They said they commented that they contacted them for their stance on Luna 2.0 or Terra 2.0, then FTX didn't respond. Fine. How do you feel about this? I don't know. Like, again, it comes back to the discussion that you and I had as the shit was nuking and it was available, right? Which is, where do you draw the line between kind of free market, let your customers trade whatever they want, and if they want to gamble on this, let them gamble, and also just like defending your customers from projects with a mega high likelihood of failing quickly, right?
Mm-hmm.
And when you look at the crypto market in general, like everything's down 50, 60, 70, 80, 90%. It's like, well, what are you trying to protect them from? You have to protect them from the entire market at that point, because everything's so correlated and nukes, and there are no safe havens in a bear market type of thing.
Mm-hmm.
I actually wouldn't object if the centralized exchanges went like, listen, this was a poorly handled piece of shit. We don't trust you, your rebirth plans, this ecosystem. Yeah, there are builders on it, great. Maybe like 6 months down the line, we'll review to see what the ecosystem looks like and then make a decision. If they said something like that, I wouldn't be against it. I've seen some cynical takes that it's just like a fee farm for people who are like emotionally scarred from this, which I also get. And then there's obviously the price discovery argument that like let people trade what they want to trade in. This is like one of the main narratives in the market. So be good for price discovery, and you need exchanges and liquidity for that. There's like a bunch of arguments. I don't know where I stand. My gut tells me they probably shouldn't support it and should tell it to fuck off for a while and review later. When the wounds aren't as fresh and when there are fewer mainstream articles floating around about how bad this is and how many people got wrecked thinking it was a savings account and so on and so forth. That's a lot of rambling from me. What's your take here?
My take is that if you start this soon, right, Terra 2.0 thing, it's probably gonna get much more volume, which is good for the exchanges. Which I think is going to be their incentive to kind of do it soon, because the longer it takes, the less likely people are going to want to be trading it, right? But I think it's obviously going to be a lot of volume and a lot of dumping, I think, if you get Terra 2.0. I don't think it's going to be like people think it, like that thing is going to go back into top 10. I don't think so. It's going to be like a sub 50, top 50 market cap coin, I think, eventually. And which just basically makes me think if you're going to add it, it's just going to be fee farming for the exchanges. And it's going to be like a way for Terra people to kind of make some money back by dumping on others, I guess. Not a big fan in general. I think it's like that entire saga has played out. For the people that lost money, I'm terribly sorry for them. But it's just, I mean, that's crypto, I guess. You buy something that you don't fully understand, you get completely wrecked. Happened time and time before. And I think like legitimately the only kind of motivation is either to make money on fees or to dump on people if you've already like if you had a bunch of Luna and got wrecked. I don't really see any other big motivation. Like it's not like Luna did anything groundbreaking on any front other than the stablecoin, and they did like something very groundbreaking there,
Yes.
which is basically taking the entire market to zero. So yeah, I'm not a big fan of it. I think the community as a whole should just not be getting involved, but I know people are going to, especially if it's going to come out anytime soon, because feelings are still hurt and like people are still emotionally invested. And I could easily see Luna holders actually try to make it back by buying that if the market cap is lower.
Ugh.
So I think it's just going to be a way for people to get doubly wrecked. And I don't really support that kind of stuff. So yeah.
Fair enough. Very reasonable. What else have I got? I think there's one last one, which is so this is a thread by 0x Hams, who is one of the early critics of the Terra peg mechanism. He also doesn't follow me on Twitter, which is deeply offensive. But anyway, we'll reference him nonetheless. So this is kind of he was making an argument as to why we might be seeing this divergence between the S&P and BTC. So it starts with saying, this is a tweet, correlation discussion needs a flow framework. Equities can get bid from rebalancing flows from assets like bonds, e.g. month-end pension rebalance. Crypto relies on new entrants. Therefore, equities can go up while crypto is flat/down. It's not the decorrelation you wanted. And then he added to it, saying, to further this, 2018 is a historical analog. Equities crashed in February after Volmageddon, but marched on to new highs 7 months later. Crypto continued to chop/dump lower. Large divergence accrued, maybe that's occurred, presumably, as rates rose, QT unwound, decorrelation instigated by liquidity flow differences. So the TLDR version of that argument is equities market structure means that there is kind of a natural bid in that market, right? As a function of the whole financial ecosystem with stocks, bonds, pensions, so on. But crypto doesn't have that, and it just simply needs fresh inflows to catch a bid. And it doesn't get that benefit of, even in a downtrend, there are some trend agnostic buying mechanisms going on in equities, be it rebalancing, whatever else, whereas those aren't as strong or don't exist in crypto, and there's a much larger reliance on fresh money entering the space. So even if equities can, recover and continue to go up, bounce, whatever, mechanistically, that same thing doesn't exist in crypto. What do you think of this argument?
Yeah, I think it's a decent one. I mean, in general, the scary part about, and this is exactly that goes towards that argument, is that like people wanna, and this is something we've been saying like the entire time. People want to hold crypto while it's going up. People don't want to hold it while it's going down, right? The bid magically disappears when prices go lower, and I think it's the exact
It's because
for
the
that exact
fundamentals get
reason.
worse. I mean, it makes sense, right?
Yeah, it's like you have it's legitimately like the fundamentals legitimately get worse when
Yeah.
prices go down, because that's like the funny thing, right? Like you look at users of decentralized exchanges, look at like protocol users, it all kind of goes to shit in a bear market, right? So like the fundamentals legitimately get worse during bear markets, which is like reflexive, obviously, right? So like prices go down, less people are interested in crypto, less people use stuff, and then everything just starts like going down. And I think that's like something that's why we get like these 80% drawdowns, and then we also get these massive pumps because during bull markets the opposite happens, right? You suddenly have like price goes up and fundamentals go
It's like
up as well.
there are two states. Everyone wants to own this thing, or no one wants to own this thing, right?
Yep. And I mean, that's just that's just legitimately what we have to deal with, which is fine in my book. As a trader, it's perfect.
Same.
As an investor, it's just kind of like
Yeah.
you have to deal with making a shitload and then losing a shitload and then making a little bit more of a shitload and then losing a little bit more. It's just how it goes. But yeah, I like the argument that yeah that there's no native bid necessarily, like there's no like natural bid is what I wanted to say, like
Yeah.
because you have to have new people come in, which does sound a little bit ponzi like, not
And
gonna
the thing is,
lie.
even the new inflows, like I think A16Z, when they raised this 4.5 billion, people are like, can you just buy some ETH? Just buy some fucking ETH. Please stop investing it in this Web3, special
Garbage.
protocol where yeah, exactly, garbage that's not going to stick around. But I think they made not a follow-up tweet, but like I think the fund manager or one of the directors said that it's going to be deployed for like, well, it's basically we're not seeing any of it.
Mm.
I don't know, man. I feel like that needs to change at some point, right? Like, the whole Bitcoin block fee security discussion that's apparently only relevant in like 100 years or whatever.
Yeah.
There's got to be a similar discussion for like funds in the space. Like, if you're going to be such enormous beneficiaries and get all these deals on favorable terms and whatever else, like, surely you've got to backstop the market a little bit, right? Like, I know going against the market and stuff never works, so on and so forth, but I just feel like it's swung too far the other way. That when you've got like these huge crypto native inflows, like in the past, or at least from a framework point of view, you'd have them like, buy BTC and ETH because they're kind of low risk, safe haven assets, and then they start to gamble, right? Having
Hmm.
started at the safe part of the risk curve, and then they kind of venture out. But now that doesn't seem to be a prerequisite, right? You just go straight into these dog shit rounds that the public is only going to see at 100x markup, and the stuff which actually dictates kind of market structure and retail flows, etc., which is the trading price of these majors on secondary markets, like they don't benefit from the large inflows, and that
It's
that seems
because
broken to me.
yeah, it's because of, and I mean, I'm gonna be like the full blown boomer here, but it's because like the trading pairs and everything changed, right? It
That's
used to
true.
be
Yeah.
you trade ETH against Bitcoin, you trade like like shitcoin against Bitcoin, and you if you wanted to buy stuff, you had to do so by Bitcoin and ETH, right? You had to buy Bitcoin, you had to buy ETH. Stuff was raised in Bitcoin and ETH.
Back in our day, yeah.
Yeah, back in our day. And nowadays, it's like no one really touches Bitcoin and ETH. They just go straight into the most degenerate stuff available. And I mean, there's a reason for it, right? You
Yes.
get these astronomical returns like easily. Like even like 6 months ago, you still had like some of these projects kind of list at 10, 15, 20, 100 times what the VCs paid for, right?
Yes.
And it's like at that point, why the fuck would you ever want to be buying Bitcoin if you can just like hit it big once with
Yeah.
like a project and then just dump on retail the
Yeah, from
entire
an
wave pool?
upside point of view, like they're watching Bitcoin go at like, 40, 50, 60K and it's up, 20x from the lows or whatever. Would they rather punt that or something fresh, new, where they get insanely discounted, like where it's almost impossible to lose,
Yeah.
So it makes sense. It's just you just really feel it at times like these more than anything, That's
Yeah,
all
I
I
mean, it
had for the
does
content,
suck.
by the way.
Yeah, I think that's why like it really does suck because I think if a lot of this money, like if even half of it went to like crypto, like good crypto projects instead of garbage, we'd be in a much different position. Not only price wise but adoption wise. It's
Yes.
just people like to kind of just be greedy, I guess, and they kind of forget that they do rely on Bitcoin and ETH to do well. And now they're kind of stuck in shit.
I
Like
wonder how
I
much they hold. Like,
yeah,
especially the most kind of venture-y of venture Web3 whatever funds, like how much BTC slash ETH they actually hold on their balance sheets or whatever. I'd be surprised if in some cases, I wouldn't be surprised if it's close to zero in some
yeah.
cases,
I
like
think
especially on
most
the
of the
BTC
time,
front.
probably.
Also, just
Yeah.
while we went live, this thing has been straight nuking down only.
Mm.
So clearly we've got a lot of market control here. I mean, just look at this daily. Shit. Ugh. It's
Yeah,
like
I mean, the
it's
thing
like
is, you look at the daily and it's not that bad. I mean, it does look really fucking bad, but it's not that bad. Like, it's not down bad. And then you look at the S&P and it's up like shitload.
uh,
It looks like a green dildo just rose from
oh my
the
god,
earth.
that's such a good candle. Yeah, I mean it's
And
into
then like
resistance, but like it's a nice candle.
yeah, and that's the worst part about it, right? Like we're running into resistance on the S&P and we're dumping while we're doing it on Bitcoin. It's like, okay, how is that gonna end? I hope we flooded this into
I
like
hope
the
we find it
bottom.
into blue. We talked about like 10k, like 12k BTC and $400 ETH or something. I hope we flooded it into existence, but I've also been trying to FUD the bottom since 55k.
And it's not been working.
It's
Yeah.
it mixed results. The jury's out on that one. Any final bits and pieces you want to cover? Anything on your radar for next week or just crypto in general? Or is it the kind of thing where you tried a big trade, or at least like a
Yeah.
structurally important trade, you didn't like it, and now you're gonna wait for a while, presumably, given its monthly
Yeah.
time frame?
So for me, basically, like the big trade, like my big trade failed. I'm glad I got out with plus minus zero, basically. That's like a lucky break in itself. That's a nice thing when you buy like so low that you sometimes, like, even if you're wrong, you get to sell like break even or sometimes even like in 5 or 10% gains, right? Like if I would have been home while the Tether fiasco was happening, where people sold the tether because they were afraid it was going to zero. Like that's the best bottom signal, right? When I saw that, I wanted to buy. I wasn't home, couldn't. But if I bought there, I would have even gone out with like a win, right? That's the nice thing about like buying when it's not confirmed yet, because prices move big when it's an unconfirmed kind of move, because no one knows what's going on, and in general, like it usually happens after big breakdowns. But given that my trade setup failed, right, I'm not going to just jump back into a trade. That's the worst thing that you can do, I think. Even for me, like I've been trading for like a couple of years now. Um, if I just jump back into a trade right now, I'm sure it makes stupid mistakes, right? That's the kind of territory where you start like over trading, and then you're like, okay, I'm just gonna buy here again, because I think it can go up after seeing like a big wick or something.
Yeah.
And the thing is, if it then starts dumping, you're like, nah, I was right the first time to close my trade, and you're like in between, and then you don't know which trade plan to follow. That kind of stuff. It's just the worst. So what I do when I have like a big trade that doesn't work out is I just leave for like a day, a two, three, four, however long it takes until I get a new setup, like a completely different one. I don't want to trade the same setup twice; just doesn't make much sense. Um, and then go at it from like a fresh perspective, because if you just jump straight back in, you're gonna chop yourself up 5 times before you realize that you're down like 15% in like just fees and slippage. And even if you're not necessarily taking the biggest losses, it's just not gonna be ending well.
Yep. Your decision making is probably impaired to some extent, especially if it's like a high time frame thing. And the
Yes.
likelihood that you get like a equally compelling signal with a good entry, etc., when you're swing trading like this is really low. Then you start
Mm-hmm.
going down time frames, as you mentioned, doing dumb stuff. Sounds good. Similar for me. I've got consensus coming up in a couple of weeks. There's your bearish catalyst, right? Another fucking crypto conference, and they didn't even invite me to say anything. Don, can you believe it? My influencer ego My fragile male influencer ego, 5 years in the space, and not interesting enough to get asked to speak, even though I'm there already. What a shame for me.
Yeah.
For me, because it means my influencer career has been fully unsuccessful. So we do appreciate instead the people who come and listen to Technical Roundup every Monday, Wednesday, Friday.
Yeah.
So we do appreciate all of you who, especially if you've sat through this entire thing. I mean, God help you. But especially like,
God.
on a personal riff, like there's one panel which I tweeted about, which was about like using charts to basically like a TA panel, right?
Mm-hmm.
And it's like, how do you not fucking invite me to a TA panel? You know, like especially if there's anyone who can contextualize this type of stuff and not be like, oh, here's my candlestick fucking course, please buy it. This candle means it's going to go down. Please buy my course, by the way, right? Like,
Yeah.
as far as people who can bridge more like retail, if you will, TA type of stuff, or easily accessible low-hanging TA stuff, and then bring in kind of market structure, derivatives, and has like a generally a good grasp of different methodologies for price prediction and trading, and also while being semi-competent at talking about it in like a public setting. Fuck, man, I'm just clearly an entitled little brat who wanted to get the ego boost of being asked to speak. I didn't get it, so I'm just gonna fucking be there and be salty instead.
I mean, you really should have focused on on-chain stuff.
I should have.
mean,
Yeah, it's true.
you should have taken your own advice, been an on-chain kind of
I'd be an
guy.
excellent on-chain analyst, like no
I'm
joke.
sure you would.
Because you never even have to generate like any tradable ideas. This thing, I was talking to Will about this, and him and I are friends. But I will pull his leg all the time about on-chain in a very fair manner. And one of my comments, and I don't think he disagreed with it, and it's definitely true in my observation. You get a lot of on-chain analysts, you get very few on-chain traders, and that in itself is pretty telling, right? There's a reason for that. So if you're someone who's like exploring different methodologies, as obvious as it sounds, it can't hurt to ask, well, what do I want to do, right? Do I want to use this to trade, or do I want to use this to analyze? And those are two very, very different things. And I might even be the first to concede that from a purely analysis point of view, especially if you want like nice looking data, nice presentations, a complete view, whatever the fuck that means. Also, to be clear, complete isn't the same as useful or actionable. Those are different things. Like if you want a complete view, I mean, on-chain will probably treat you pretty well, right? Like different time horizons, different participants, whatever. But that's not to say it's going to generate a bunch of trading signals or even just lend itself well to generating a trading system. Anyway, that's my ego bruised rant over. It should be a fun conference anyway. Conferences are usually bearish, which sucks for price action. I mean, where the fuck do we go? But I'll try to record some stuff, maybe vlog a little bit, see what kind of booths are around these days. Last conference I went to was I think Consensus as well in what was it, 2018? 2019?
Did we go together? Yeah, we did.
Yeah, we did. That was in New York, right?
Yes, it was.
Yeah. I also remember that we went to in Las Vegas when the bear market kind of just started, and there was like private jet ICO coin and all that type of stuff. That was
good times.
Good times. when instead of A16Z 4.5 billion funds running the venture space, you had one guy with a spreadsheet called Ian Bellina. he was the arbiter of all things investment. Anyway, before we get into our war stories, and I think that's all from us, right?
Yeah, it is.
Awesome. To all our listeners, thank you for listening. Leave a like on the video, subscribe to the channel. As always, thank you to the FTX app for supporting us. Download it, hide your portfolio, maybe DCA if stuff starts to really nuke. YouTube stuff, as always, we appreciate all of you listening, and we'll have an excellent weekend. We'll see you on Monday. Take care.